Good day. I'm Hubert Botha, and I'm the head of the tax and legal practice for KPMG in Southern Africa. Thank you for joining our budget event. And what an eventful budget year. Not only is our country facing many challenges, low economic growth, high unemployment, even higher government debt, and overburdened taxpayers, but for the first time ever, our budget was postponed. And then there was the uncertainty. Will the budget go ahead? Won't it go ahead? There were last-minute scrambles. And yesterday, we had our budget presented to us. Now, the question for me is, was it worth the wait? Was the budget achieving what we wanted to achieve, and were all the challenges addressed in the budget? We will look at these questions and much more during today's event. Unpack those questions from both an income tax perspective, a personal income tax perspective, and an economic perspective. And then we will evaluate what does that mean for your business and for you as a taxpayer. Here to help me unpack the budget, I have got Frank Blackmore. He is our lead economist at KPMG. I've got Carolyn Chambers, head of our Global Mobility and Employees Tax, and I've got Itumeleng Nkadimeng, who is head of our corporate tax practice. You will see that there's a place for you to ask questions, so please feel free to ask your questions, and we will try to get to those questions. If we can't, we will answer it off the line. Okay, so maybe let's just jump into it, and let me ask the first question. Frank, and I want to start with you. A lot of people think the budget is about tax, but it's not necessarily. It's not actually tax, it's the economy. So our economists should start with the budget. So Frank, just high level, what was your views of the budget?
What was our views? All right, yeah. I think there are a lot of moving parts to this budget, and I think we are largely distracted by one or two of the smaller components, which I'm sure we'll get to and discuss. VAT being the operative word. But just to sketch a larger budget, South Africa has had its first government of national unity. That government set up 3 strategic goals that it wants to achieve. One is inclusive growth and job creation. The second is reduction in cost of living, as well as poverty levels. And the third is creating a capable state. So if those are the goals of the country, the budget tells us where we're going to put the money in order to achieve those achieve those goals. So when we're looking at the budget or watching the budget, is it the same as what we've seen for the preceding 5, 10, 15 years? Or is there a step change in this budget that will get us to achieve these goals? And I'd argue on a more broader level, we've probably missed a trick or two in the budget in order to get us to achieve these goals. If I take a look at the pro-poor elements of this budget, the main expenditure items there would be your grants, health, and education. The expenditure on those will obviously empower citizens of the country in future to be absorbed into the labor force, etc., and takes care of the ones that are not absorbed in the form of these grants. But if I add those 3 things up, and I add the budgeted amount to infrastructure spending as well, so a pro-growth element, if I add that all up, it's still smaller than the public sector wage bill and the debt service cost. So if you look on the whole at the budget, it's still biased towards public service and the debts that we have. And those debts were, of course, incurred through a lot of SOE activity, corruption, mismanagement, etc., etc. And I think that's what we should watch here. The ratios are important as opposed to the specifics. But I'm sure we'll get into some of the specifics. And those are my initial thoughts.
Thanks, Frank. And I do absolutely want to get to that, the expenses side and also the revenue side. But just from a tax perspective, Carolyn and Itumeleng, I'm going to ask you both the same question. Just your high-level views of the budget.
Sure. I guess I'll start.
I'll start with Carolyn.
So from a VAT perspective, obviously that's been the one, as Frank says, the one topic that everybody's had on their lips for the last 3 weeks. Will there be a VAT increase? Won't there be a VAT increase? The kind of middle ground somewhere middle ground, which is 0.5% this year and another 0.5% in 11 months' time. An interesting settlement. You can see that there are two or more parties at play in the government, that this isn't just one person making decisions or one party making decisions. I'm not sure that the complexity of adding a decimal point to a VAT rate is necessarily something that's been properly thought through, but we'll be dealing with that over the next year or two, I guess. We saw the usual syntax increases above inflation. So again, that was not unexpected, but will have an impact. And then from a personal tax perspective, a little bit of a sneaky move. We'll do nothing and nobody will notice. So I think by not moving the tax brackets for a second year in a row, not moving the rebates, not making any inflationary adjustments for the medical tax credits, the impact on all individual taxpayers will be more significant than necessarily comes out in the budget itself. And then quite a lot of administrative bits and pieces that have been slipped slowly in through the various elements of the Annexure C proposals that we've seen, which will have an impact, and we'll see what the details are going down the line.
Yeah. I think from an international and corporate tax perspective, I mean, the theme over the last 3 years or so has been around broadening the tax base and a more efficient tax administration. We also saw a reduction in the corporate income tax rate from 28% to 26% as part of the previous budget proposals and then legislated. So views, I think, around what this budget means or how people should feel about this budget from a corporate income tax perspective is really going to be driven by this theme. And it's a theme that's been carried through into the current budget. Again, there's been quite a big emphasis on the broadening of the tax base, specifically from an international tax perspective, to ensure that there's no continuous erosion of the fiscus. People might say, well, because we haven't changed the tax rate, is there actually anything really for corporates? And I think there is quite a lot for corporates and a lot to think about. If you think of our national tax policy, it's based on the premise that we will continue to collect more revenue on the basis of fiscal growth, a strategy that promotes fiscal growth and inclusion. Frank spoke about inclusive growth, and that's, I think it's quite elusive for corporates currently. We've been stagnated in terms of growth for the past 10 years. So a broadening of the tax base is likely welcome, because what that means is that government is shifting or capacitating itself to grow the economy. And if you have a growing economy, it means more participation from the current taxpayer base, new entrants, and more revenue for collection. So I think a balanced budget, and the minister probably did the best that he could with what's at hand.
And I think we shouldn't confuse the difference between increasing taxes compared to broadening the tax base. And I do want to unpack that a bit, but I can't help myself. I want to reflect on the budget that never was. So the embargo was lifted. We all saw the previous budget. So I do want to spend a bit of time just, Frank, unpacking. If you compare the budget that never was to the budget that we saw yesterday, do you think yesterday's budget is a better budget? Was it worth the wait?
Well, it's marginally less painful, if I can put it that way, to be diplomatic. I think the initial proposal of a 2 percentage point VAT hike was in contrast to a lot of the goals that the budget was going to achieve. As I mentioned, if one of the goals is to reduce poverty and alleviate the cost of living crisis that a lot of South Africans, you don't slap 2 extra percentage points on a VAT rate. Saying that, there obviously are unending ends or demands for money within the budget as well. And we saw both the initial budget from the leaked speech, as well as the yesterday's budget, had quite a large focus on infrastructure spending. So that's kind of moving in the right direction, because I think from our lived experience as a South African, you would have seen, heard, and experienced a lot of infrastructure deterioration over the years. Infrastructure is obviously important for a productive base. Private sector businesses can only work if your infrastructure is working smoothly, and this has held us back for quite a number of years now in terms of growth rate. So I think the expenditure is in the right area. The reduction in VAT now to a compromise, let's call it 1 percentage point over 2 years, it helps because it's not 2%, but I think it's still targeting the wrong areas. The debate should not be where do we get the revenue from. We often hear this. The debate should be until government has its house in order and is providing efficient expenditure, no matter what it is, public services, infrastructure, whatever it may be, we don't spend more than we collect. Because I think the South African consumer, and we'll get to that as well underlying the corporate taxes, your demand starts with your consumer, right? If your consumer isn't demanding more goods and services, businesses can do all they want. They're not going to be more profitable. They're not going to find growth. So one has to look at the plight of the consumer in South Africa. And with, 30, arguably 40% unemployment on the broad definition, we need to grow this economy without putting undue stress on that consumer.
So, Frank, just help me out.
Yeah.
The previous budget, the one that never happened, let's call it that,
Sure.
had a additional revenue ask of 58 billion.
Sure.
This one has got a revenue ask of 28 billion.
Yeah.
So isn't that automatically a deficit within our budget of 30 billion? How do we reconcile these numbers?
Yes, I think it is. I think there was a bit of give and take. As Carolyn said, I think what was interesting about this budget was the political process attached to it. So instead of one party coming to the table, we said, no, we don't accept this budget. We forced all parties around the table. And when that happens, there's always going to be a certain degree of compromise. And I think within that compromise, we have had certain expenditure items that have dropped off the list, hence the smaller, I think, deficit amount that we see now. But these tiny adjustments, getting back to my original statement, does that get us where we want to go in terms of strategy for the country? And I'm saying we're arguing on these minor issues, but we're missing some of the big issues that will drive the economy where we want.
Now, this was the first time ever that our budget was postponed. And I'm sure that the audience and me as a taxpayer would like to know what is the impact, because there's certain timelines that needs to be met. And if those timelines hasn't been met, there could be practical implications for that. So my question is, I think it's linked to you, is what is the practical implications of the budget being postponed?
Okay. I think, that's the beauty of a constitution, right? And the beauty of the Constitution of South Africa is that we have a tax legislative cycle that is there's certainty around it in terms of timelines. We know a budget is going to happen. Post the budget within a specific time frame, we'll then be looking at legislative proposals, more technical, so that taxpayers can understand what is going to change and how it will impact their tax positions. This budget was postponed as a result of the VAT rate. That was the one area that was in most contention. If you look at the technical proposals between the time that we had the first budget and now budget 2.0, the technical proposals very much remain the same. So from a legislative cycle point of view, I think we'll still be able to execute within the timelines. So National Treasury would be able to sort of send out the draft bills within the anticipated timelines, and then we'll continue with that cycle. More on the practicalities, though, is really around the fact that taxpayers, particularly corporates, their tax cycle follows your financial cycle. So in terms of your timing of the payments, as well as your ability to discharge your obligations, that very much remains the same. It's the technical proposals where you have to calculate what actually is my fair share that I need to contribute that would be impacted. But again, that would follow the legislative cycle. So I think from a practicality point of view, as corporates, they will still follow the same timeline. I think there is an area, though, maybe for exploring what that would mean in terms of your day-to-day as it relates to tax rate changes. We didn't see a tax rate change for corporate, but on the personal and personal income tax side and VAT side, there may be some practicalities that need to be considered.
I think about the change from there being bracket adjustments in the individual tax table originally to now seeing no adjustments actually alleviates a little bit of the pressure from a timing point of view, because ordinarily, we're now sitting wherever we are, the 13th of March. Many payrolls have already been run for March. And if there was a rate change, that would cause some practical issues where you've either had over or under withholding for the month from the employees and then have to adjust in April. We also saw a lot of the changes that are being made coming in effective from 1 April instead of 1 March. So where we would ordinarily see them as 1 March, which is the start of the individual's tax year, we're now seeing them 1 April. So you'll have a different tax treatment in the first month to what you see for the rest of the tax year for individuals. The one aspect that may potentially have some practical implications is the ETI threshold shift, because now more employees under the age of 30 will qualify for ETI because the bracket has moved from 6,500 to 7,500, but those may have already been processed through payroll for the month. So adjustments are going to need to take place next month.
And then obviously for the VAT increase, there's a specific date that was mentioned there, which is the 1st of May, and then April in the 26th year, am I right? Yep.
Correct. And there was also an indication in the customs space that excise duties going forward will come into effect from 1 April rather than 1 March, as has happened historically. So it's quite an interesting, they've almost used this as an opportunity to make those practical timelines a little clearer.
Now, this is not a fait accompli, as they would say, that our budget will be passed. So it still has to be debated in Parliament and then finally approved. What happens if the budget is not approved? Frank?
I believe that the guys will find a way of getting to a budget that they can approve. I think just the kind of embarrassment for the country of not agreeing a budget and have to defer to the current set of rules would look quite bad for the Government of National Unity. I don't think we're far from it, as you've mentioned, that declining deficit. So I think we're nearly there. But to answer your question, if that doesn't happen and we cancel the budget, we have to move on according to the rules that are currently applying. Which means that, although the economy has grown, you would have had more takes from your VAT just based on inflation, more from your income taxes, so you'll have more revenue in the pot than you would have had last year to use. But the problem is those will have to be used on the same strategies, let's call them strategic ends, that were thought up last year, as opposed to, pointing that kind of expenditure at the current needs of the country. And obviously on a strategic level, for any business to use last year's strategy in this year's execution is suboptimal.
Basically a year behind.
A year behind, absolutely.
So let's move a bit on from the old budget.
Okay.
Your opinion on how government tried to resolve the funding gap?
So as we said, it was a bit of a compromise. We still see a VAT increase, as we said, the 1 percentage point coming in. That's obviously going to impact society, but on the contrary, they try to lower that impact a little bit through a number of initiatives. One, not increasing the fuel cost, so fuel levy, the fuel tax. That helps a little bit because it's obviously an important component of transport costs, but your vehicles are going up still by inflation. Your driver's cost is going up by inflation. Parts, services are all going up. So it only shields partially the cost of, let's say, transport costs. Then there was above inflationary increase in the social grants. So that will, of course, assist the workers or the recipients of those grants. And there was an additional items added to the zero ratings. So it basically said we're going to expand the basket of zero rated goods so that that'll help cushion the increases that you face as as grant recipients, so to speak. I think this is a compromise solution. One has to, obviously, there is no standard average person. So if you do the maths, everybody consumes slightly differently. A large criticism has been that people don't shop necessarily for zero-rated goods. They shop for value or affordability. And therefore, a certain degree of those benefits will probably not accrue to the people who need it most, which, so that's one criticism. The other criticism is a VAT, from an economic perspective, is a very efficient tax. It's usually spread over a large population, so everyone pays a little bit. It's easy to collect. It's cheap to collect. So from an efficiency perspective, it's a great tax generally to pay stuff. But that's ignoring the South African political and social situation. And as I've mentioned, with arguably 40% unemployed, only 7.5 million registered, personal income tax payers, it leaves a large segment of society subject to this. What does a VAT do? It decreases your disposable income, so you have less income at the end of the day to spend. It also can disproportionately affect lower, paid workers or folks who are earning less income, because if I buy the good or they buy the good, we're both contributing the same amount of tax per quantity of goods that we're consuming. So in tax parlance, that's obviously called a regressive tax, and therefore it's unpopular. So there are a lot of ways to sort this out. I don't think it is sorted yet. I think we need to get rid of perhaps that 1 percentage point increase and rather sort of take back or claw back some of the expenditure that was on the horizon. The excessive expenditure. People always say, you can't cut education, you can't cut... I'm not saying education and health. We have a big cabinet, we have a lot of illicit flows. We know SARS is keen to collect more revenues where they can't reach at the moment. They need additional funding, and we might get to that as well, because they got a bit of money in yesterday's budget too. So it's sort of an incomplete answer, but I think it's a complex issue, and people need to think out those issues.
Yeah, and the matching side to that is on the personal income tax bracket side. The pressure that creates for the man in the street at the tax-paying level. So if we ignore those that are on the grant system who are not taxpayers, which is a large percentage of our population, as you indicate, all those that are paying tax, which is a smaller portion of the population, are now in the second year in a row having to take the pressure of inflation in the market, in their day-to-day existence, but without the benefit of adjusted tax brackets. So anyone who did receive inflationary increases last year and the year before, you've moved yourself into potentially a new tax bracket, and those tax brackets haven't shifted with inflation. So now you're paying more tax than you would before. So, and that difference, again, although it looks like it's doing nothing, is impacting the lower income earners more percentage-wise than it impacts the higher income earners. So a person who's earning in the 2 million bracket is going to feel approximately 0.39 to 37% over the 2-year period, additional tax, whereas someone at the 250,000 Rand mark is feeling 1.5% over that 2-year period. So the difference is clear that although monetary-wise the contribution is higher at the higher levels, at the lower levels the impact is felt a lot harder.
And maybe to that point, the VAT increase is highly political, and it's a social minefield.
Yeah.
And everybody is so focused on the VAT increase, but as you correctly said, Carolyn, they've missed the entire personal income tax implications. Now, if I can just read from one of the documents to the budget, it says here, the largest contribution over the medium term is from increases in the VAT rate, while personal income tax is increased in 25-26 by not adjusting the tax brackets, rebates and medical tax credits, which isn't actually correct. Because if you look at the tables, the largest increase is because of the fact that the brackets hasn't been moved and changed.
Correct.
And that then has a direct impact on everybody's increases that they receive, because they're effectively paying the increases over in new brackets and higher taxes.
That's correct.
So if you're saying that we are not adjusting the tax brackets, it's a bad thing. It's not a good thing.
Yes, it doesn't come across in the way that it should.
Yes, yes. Now, do you think that will impact how consumers will spend and how employers will look at remuneration?
From an employer standpoint, the affordability has to come first. The pressure, it does put pressure on the corporates, and yes, the corporate income tax rate didn't go up. So maybe the assumption on government's part is that corporates will play their part and contribute more towards remuneration. But without growth, that's just not possible. So again, it has to come back to corporates have to grow to enable them to increase remuneration, to be able to help the man in the street actually cope better with the day-to-day costs.
So any man who wants to move forward, they should actually get an increase to cover the tax, additional tax, and on top of it, otherwise you are moving backwards. And that's now, as you said, for the last 2 years that has happened. Then if we move on, in the previous budget, there was marginal adjustments to the tax brackets. Do you think that's a better solution?
You mean the one that wasn't?
The one that wasn't.
Yeah. Look, there were adjustments at the lower income levels, which on the face of it looks like the right thing to do, because then the lower income earners are less impacted by the changes in the budget. But the reality is that is equally benefited, the higher income earners benefit equally from those adjustments, which means that the money that comes through is overall less, and the impact is actually quite significant. So I guess in order to move from the 2% to the half plus half equals 1 on the VAT side, they had to get rid of the lower band adjustments in the individual tax side.
So to close the loop, Frank, do you think that South Africans' personal income tax is too high? Are we, the man on the street, the women on the street, are they paying too much tax?
So that is never an absolute question, right? Because I can give you countries that have to pay far higher personal income taxes as well as corporate taxes and VAT rates, right? So it's a relative question in economics. Where does it put us in terms of revenue to GDP? Well, it puts us in the same class as the United States, Australia, Switzerland, and if you look around, we don't get the outcomes based on that type of tax rate. And that would be around 28, 29% of GDP if you do the calculations right, you know. So there, no. Secondly, just given and we've spoken about this, the thin tax base. We've got these 7.5 million taxpayers, of which 500,000 pay half of that personal income tax. So it's already weighted to the top end of that. And that's not including sort of the ultra rich. This is folks earning from $1 million upwards is about 500,000. They're paying half the tax. If you had to classify what a wealthy person in South Africa is, you would maybe take the top 1 million taxpayers, and that gets you to a band of around 500,000, which by international standards is nowhere near a wealthy individual, let's say on assets or income. So just on a relative measure, it does feel that South Africans, and I mean this debate was had before the budgets came out, can we increase personal income tax? Can we increase this? And generally the answers were a resounding no. We can't increase personal income taxes. If we want to retain competitiveness, we can't do the same with corporate income taxes. It really only left VAT, but we knew, as you said before, that there would be political ramifications to touching VAT because of its disproportionate impact on the poor. So in my world, I would be inclined to say we are probably at this point overtaxed, especially if we look at what we receive for that tax payments. You know.
Value for money.
Pay too much for what we get.
Yeah.
Yes. The other thing is just also on the rumors around wealth tax and, you know, possibly bringing that in, exactly what you say, Frank. You introduce a wealth tax, it impacts only 500,000 people, firstly, who are already paying a top rate of 45%, and many of them can just up and leave. So you potentially impact the type of person that we have that's actually generating income in the country, and we negatively impact the economy. We also then create a lack of attractiveness for others internationally to want to live and work in South Africa. Businesses invest through people.
Yeah.
You know, you can't make an investment in the country unless you send people to the country. If they don't want to pay massive amounts of tax, then they're just not going to come. They start using other countries, neighboring countries in Africa, for example.
And indirectly, by not increasing the brackets, you're actually increasing the taxes. So you're making it,
Yeah, absolutely.
even though you're not changing the rates, you're making it unattractive. So
Correct.
it has a compounding effect. The fact that we are saying that there was no increase in personal income tax is not entirely correct.
Absolutely.
Frank, so in the very simple form, we've got revenue in the budget and we've got expenses. So I do want to look a bit about on the expense side. So your view on the spending cuts, are you happy on the spending cuts? Was there spending cuts? And what should there be spending cuts on?
So I think at the end of the day, there were probably some cuts, but on average, I think public services went up above inflation. I think the growth rate was 5.6% in most services. So things have actually gone up. But I think we all understood that the need in education, where a lot of provinces came under pressure for retaining teachers, same with medical workers in particular, highlighted the fact that there was money required for that. I know also there was something like, I think it was 1,000 medical students ending their studies that couldn't be absorbed into the health sector due to the lack of funding. So these things obviously had to be remedied because they are the cornerstone of public delivery. I also think if we look at that growth aspect again, because remember the bottom line here is we need to grow in order to broaden our tax base, in order for corporates to be more profitable and to get more revenue from them. A large amount of money, what did they say, $1 trillion, I think has been set aside for infrastructure spending over the next 3-year period, all right? Largely that will be, so 40% will be through SOEs, and we know there are a lot of needs in SOEs, especially your rail, ports, electricity as well. A lot of that money is also, I think, going to be the private sector will come to the party in a lot of those. The public sector has to make the environment attractive, I think, for the private sector money to come in. But one of the big words that he keeps speaking about is the PPPs, the public-private partnerships, and I think that'll draw a lot of money into that infrastructure space. We already know from the electricity scenario with, 22,000 megawatts that have been added to our grid in private sector funding, that'll make a big difference on the environment, the infrastructure environment. Also those plans for private sector to enter the ports, the running of the ports and the railway. And in order to facilitate that, we needed to update our PPP requirements, and those were announced by the Minister will come out 1st of June, which will then open that additional investment to come through. The biggest expenditure items are always your education, your health, grants, but on the negative side, a bigger expenditure item than all of those is obviously your debt service cost at 424 billion, sucking up 22 cents of every rand of revenue, which is far too high. That could be used for, growing the economy, uplifting people's lives, etc. And therefore, that is a big target of government, this fiscal sustainability target that they put on that they mentioned that they're going to keep up with in this budget.
I do want to touch on government wages and also grants, but one important thing that has happened in the budget, which I'm happy about, but I don't know if it was enough, was there was additional funding that was allocated to the South African Revenue Services, 3.5 billion for this year and an additional 4 billion in the medium term, which is different to what was in the budget that which was only 3.5 billion. So Itumeleng, to you, what is your views on that funding, and what do you think is going to happen with the funding?
I mean, so 3.5 plus 4 gets us to 7.5 billion. So that's not an amount to sneeze at. It's also 7.5 billion in the context of SARS having already started its modernization project. So it's not like they're starting from zero. That 7.5 billion over the medium term really means that we are capacitating SARS to be able to increase its tax collection. And that's what the commissioner really was asking for. And he was saying, for me to broaden the tax base, give me more so that I'm able to reach more taxpayers. Currently, in terms of what SARS is able to do with the modernization project is, I think as taxpayers, we've all experienced it. We're able to see automated assessment. There's more disclosure required by corporates so that there's integrity around the fact that what you've disclosed is what you're paying is actually your fair share. But it was also mentioned in the budget that there's 156,000 substantial economic participants that we're not able to get to. So again, the theme of broadening the tax base comes through quite strongly there. But there's also monies owing to the state. So I think beyond the efficient tax administration is also around the collection. What that really means for taxpayers is that actually, if you think about it, is how do I test the efficiency of my system? How do I test the fact that everyone has paid their fair share of taxes? How do I test that I've collected everything? It goes to verification and audits. So what we can anticipate is audits. And so taxpayers really need to gauge their level of audit readiness. And that goes to the integrity of the data, the strength of what I've disclosed and what I've determined as my tax contribution. But lastly, also your understanding of the administrative process. Because that is something that, sort of can be used by SARS as a lever to actually get additional revenue. Whether that's unfortunate or fortunate is a topic for another day. So simplistically, I think taxpayers need to be thinking to themselves, what could go wrong? How do I mitigate what could go wrong? But also, how do I build trust in my systems to make sure that I'm paying my fair share of taxes? There's trust between myself and my relationship with SARS. So better visibility over your financial systems and your tax affairs is quite important because taxpayers can definitely anticipate more audits.
You can see already that the advancement that we're experiencing with SARS systems, there's a far greater use of automation and even AI within the SARS environment, which many corporates and individuals around the country don't have access to as yet. So there's already been a step change. We can already see the benefits of that investment, and taxpayers are going to need to beef up to be able to join SARS on this journey. I anecdotally used the SARS AI assistant the other day. I ended up having a 45-minute argument with the AI assistant. It was most entertaining, and it was really, really impressive. Its iterative learning is clear. It gives very clear and different answers to each iteration of the question that you ask. So, there is a move to help taxpayers to be able to catch up and keep up as we spend this additional 7.5 billion.
And that's important. Stay up to date or be left behind.
Yeah.
That's the key question. Frank, just quickly going back to the wages and the grants.
Okay.
Is it as simple as to say, don't worry, we will pay more government wages, we will pay more grants, but that will be funded back into the economy through spend. And therefore, it's a circular reference. There's no problem because that's how we grow the economy, is to give more salaries and more grants, which will grow by. Is it that simple?
So it's yes and no. Remember, I think one of the most important aspects of any business is, are you getting value for money? And government is no different, So you could create a large number of jobs, and exactly as you say, through those jobs circulating through the economy, through consumption, you would create an economic benefit for sure. Consumption in South Africa is about 65% of our GDP, so the more people consume, that definitely does change our growth trajectory. But you'd ideally want those resources going to where they would do the most benefit. So let me say, if you have two businesses, and the one business could take R1 million and create, maybe 2 jobs and GDP worth, 1.5 million, and the other business could create 100 jobs with 20 billion's outcome. It's obvious where you'd want it to go for an economic benefit. And the issue, of course, with a large public sector is not only on the value for money, but also the efficiency side of that public service. You want value for money, and I think that's where South Africa is also starting to ask a few questions currently, not particularly about the quality of service coming from government, but all the extraneous type of issues around it, the corruption, the mismanagement, the whatever. People are saying, why should I have to pay more taxes if these will, there's a good chance that a lot of it will be squandered. And I can already see on social media regarding this trillion going to infrastructure spend, that is the main criticism around it. Not the understanding that, of course, it will build the economic the base infrastructure on which the economy will grow. I think everyone's in agreement that that's a good thing. It's just, how will it be done? And a lot of suggestions are projects must be signed off by external parties. There must be a lot more oversight on it. And if that happens, great. I think we can all benefit from the current proposals.
And so what I'm hearing is, where do I invest my money? Where do I spend my money? And what's my return on investment?
Exactly.
So I need to spend it at the right places. And spending it on, for example, a increase in wages is maybe not the best return on investment that I might get.
And of course, there are other implications as well. If government grows, they need to borrow a lot. That increases the interest rate in the economy. It's kind of crowds out the private sector. We've seen the private sector remain kind of stable and even reduce in the number of firms listed, for example, on the JSE, etc., over the last 10, 20 years. So there's an indirect negative impact as well to not doing that.
So let's talk about the revenue side.
Sure.
So the increase of taxes. And Itumeleng, my question for you, your view on improving tax collection and broadening the tax base, is that better than raising taxes? And why do you think so?
So I'm glad you asked that question, and I think it speaks nicely to what Frank has just discussed now. Raising taxes really means that we're asking more from the same taxpayer base. And you're shifting the tax burden to corporates that currently actually are not able to grow in the current economic or socioeconomic circumstances. So yes, you can raise a tax rate, but will you actually generate the revenue that is required from it when you have a constrained taxpayer base? And that really already lies in the numbers, and it also lies in the activity. If you're saying that, JSE listed companies, we've seen less companies listing or more companies delisting. Whereas if you are broadening your tax base, you're increasing your pool and you're increasing you're expanding the taxpayer base. That could, yes, come in new numbers in terms of new market entrants, but also it comes in different levers that National Treasury may be able to pull on in terms of saying, well, what are transactions that are there that are going undetected? What are transactions that are there where there could be more efficiency in terms of how I tax those and collect on those? So definitely, I think a broadening of the tax base is favored, theoretically. I guess, the broadening of the tax base itself is a function of economic circumstances. So the question really must be around, yes, I want to broaden the tax base. Yes, I want to collect more. And raising taxes is not going to do that. But how do I fuel investment? How do I fuel economic growth to be able to get to that objective?
And you could see from the minister's comments yesterday towards the end of the budget speech where he was saying, please, I need you all to contribute. Everybody needs to participate.
Yeah.
It's that, don't leave it to the 500,000 individuals or the larger corporates. Let's all contribute.
Exactly.
But at the same time, the government has to give something back in order to to create a position where people want to actually contribute.
Yeah. Let's all be good corporate citizens. Register and pay your fair share. We've got a question from the online audience. Where will rising taxes and low growth from the last years and no appetite from government to reduce expenses take us in 3, 5, 10 years? Will it become too costly to live in South Africa? Frank, I'm looking at
It's
you.
yours, Frank.
It's definitely Frank.
Right. There are two aspects here. The one is growth and the one is costliness. So costliness obviously depends on inflation, and the two are somewhat related, because if you're spending that money, going back to your previous question, inefficiently, it's obviously going to drive up costs faster than it would if you're spending that money efficiently. So I think South Africa has realized, and I'm talking about, all, citizens, companies, etc., that we're at a bit of a crossroads. I think that was confirmed by the election of the government of national unity as opposed to one party. And I think we're starting to understand that those same people who voted for the government of national unity are voting for change in terms of the strategies that we're going to follow in order to drive this economy forward. And this came to a head this time with that 2% VAT hike, not to go into that issue again, but it's basically saying, are we on the right path? Because before I hand over any more of my money, I want to know that you guys also get it and drive us in a direction that creates economic growth. Because in 3, 5, 10 years, it will be unsustainable to follow this path without generating more economic growth. The pressure becomes a vicious cycle. The more the consumer is under pressure, the lower they consume in terms of markets. That obviously has an impact on corporate profitability. Corporates can also sell overseas, but if it's not growing great overseas either, and we know we have some geopolitical headwinds at this point as well, then your corporates feel the pressure, they start closing down, delisting, and the cycle keeps perseverating. And what we want to do is move away from that, create economic growth, more opportunities, pull people into the economy, broaden that tax base, and so on. And that becomes a virtuous cycle leading to more economic growth. And I think that's where we're standing now. No more government expenditure until we see expenditure that leads us or takes us down the right road in this circumstance. And that will, I think, give rise to a lot of other opportunities. We've tried this sort of centralized command governance for a long time now, and it hasn't worked. And really, what was government for? To enforce rules, contracts, defense of a country, and to keep a constant currency, basically, when you trade internationally. They're not in the business of electricity production or, any of these other issues. And therefore, I think they need to relook at their role as well as government. What is their role going to be in achieving this growth? Because I think that's the only way that we reach our potential.
So, Frank, we've spoken a lot about VAT and the increase in the VAT and the implications it would be, not only just for the man on the street, but also how it will impact our economy, increasing potentially inflation, increasing interest rates, reducing spend and all of that. But what I think our audience would also want to know is, what are the practical implications for a company now, a business, when the VAT changes? So, Carolyn, I think maybe to you is that the VAT rate changes 1st of May. So does it mean that simply from that date we charge 15.5% VAT on everything?
So I guess the answer to that question is yes and no. And it's looked back to 2018, where the last VAT rate change happened. We're going to experience very similar experiences to what we had before. Sometimes you're going to have both VAT rates on one invoice because you have historic services that were provided prior to the change and then services provided subsequent to the change. Systems will need to accommodate both. SARS will most likely do what they did last time, and that's send out communication to all VAT vendors to help with this transition, to explain what is required of you, because on your return you're used to seeing one rate, right? You don't have a combination of two. There's a complexity in relation to issuing credit notes, for example, for historic services. So I issued an invoice prior to the change. Now I'm crediting it post the change. Does my system accommodate the credit note at the historic rate and the reissue also at the historic rate, because that's when the services were provided? So it is going to put a lot of pressure again on the teams within the corporates who are responsible for invoicing and managing cash flows, etc. There are certain transactions that will be dealt with in one way, others in a different way, and there's a transitional set of rules that will apply. And again, similar to what we saw in 2018, there will be some confusion along the way. And you don't want to get it wrong, because if you're, you may have an input rate which was at the old rate, and then you're paying output tax at the higher rate. It's all a very complicated system to manage. We won't necessarily have a situation where the same people that dealt with the 2018 change are still around to manage the 2025 change. Those people have either retired or moved on to different employers. So you're re-educating once again.
And implementing controls to make sure the invoices that you receive are the right rates, because
Correct.
you have to keep the other taxpayers honest as well around that. So, and then I guess the other knock-on effect is the cost for companies now to update systems and to make sure that it's double update. So it would be this year and then next year doing the same thing.
Yeah, Groundhog Day in 11 months' time.
Yeah. And it's not even 12, it's 11 months.
Yeah.
And it's the 1st of May, so there's not a lot of time to get all of this right.
Yeah.
Itumeleng, from a corporate tax perspective, one of the biggest announcements that was made in tax, in corporate income tax, was the introduction of BEPS Pillar 2 and the minimum tax. Now, if I look at what was said in the budget, which wasn't a lot,
Yes.
but one of the documents in the budget said the global minimum tax is expected to increase the amount of corporate tax collected over time. It requires large domestic and foreign multinational operations in South Africa, as well as South African multinationals in other jurisdictions, to pay more corporate income tax if their effective tax rates are below 15%. So my question to you is that, would we have wanted to see any legislative changes in the budget to accommodate for this global minimum tax?
I think certainly. I mean, the global minimum tax regime really is centered around your globe-based erosion model rules, and that's to ensure that wherever you are operating, or whichever jurisdiction you're operating at, you're paying your fair share of tax. And then to the extent that you are exceeding the 15%, revenue authorities are able to collect that off the back of your economic activity in that jurisdiction. The legislation was enacted in December, so promulgated in December of 2024, and to be effective from January. There are some question marks around certain areas of practicalities. One of the biggest examples around that is where there are foreign tax credits and the ability to be able to claim foreign tax credits. So while the legislation is there and the concept is well understood, particularly as, revenue authorities are also moving to a taxing system that is aligned with global norms, there needs to be some sort of certainty around how does the legislation work, and what are taxpayers able to sort of claim, unable to claim, and how they would be able to do that. So I think what taxpayers really wanted to see in this budget was the practicalities around legislation that is newly enacted. Now, again, we are suspended until sort of, I guess, the draft bills come out and whether there's anything there that may assist taxpayers.
So while we're talking about taxes and announcements, Karen, maybe to you first and then to Itumeleng, were there any important tax technical announcements in the budget?
Obviously from the VAT perspective, there were a number of line items which often tend to kind of get lost in the broader speech. But to clarify certain elements of how things will apply, what taxable suppliers will be shifting, what will change. So there were a number of very technical little elements, both in the VAT space and in the individual tax space, where I would have expected to see more but I think there was so much focus on getting the budget over the line that we will potentially see more when we get draft legislation coming through. From the individual perspective, targeting foreign earned retirement funds, it's something, the foreign earned retirement funds is something that Revenue has wanted to kind of get its grips on for some time, where you have South African residents who've worked offshore for a period of time and accumulated a foreign pension fund. The concern is that those individuals are ending up not paying tax anywhere at some point. I don't think it's as big an issue as Treasury might think it is, and we will wait to see what that legislation looks like, because you can't end up in a position where they now get taxed in two countries. So inevitably foreign tax credits will become claimable between the two countries anyway, and the services were rendered outside of South Africa, so we'll end up losing out where tax is paid elsewhere. But there may be a gap where people are paying no tax on retirement, where South Africa believes that there's a portion that should come to us. And then the other element, which I think will be quite useful and helpful, is around creating the ability for there to be a single employer for pay-as-you-earn withholding responsibility purposes, so that group companies can nominate a corporate within the group that can then manage and administer the pay-as-you-earn for the entire group. It does happen inevitably anyway, but this will hopefully alleviate some of the administrative pressure around that, and including employee share trusts, where there's quite a lot of complexity and uncertainty around registration there.
Yeah. From a corporate income tax side, I think I completely agree with Carolyn. The devil's in the detail, and we'll have to see what the draft legislation looks like. But clearly, SARS has identified certain loopholes. They have sort of announced, or there's proposals relating to preference share arrangements and the misuse of third-party backed shares in order to sort of circumvent the anti-avoidance rules, as well as it relates to hybrid equity instruments. So clearly there's a loophole where there could be more tax perhaps collected that isn't then being collected in that instance. Over the last number of years, we've seen legislators' updates to your interest limitation rules, and that's really to ensure that we're not eroding the tax base by there being interest deductions where there's no corresponding income, and that again is being re-looked at and clarified, and I think that's part of the broadening of the tax base. And then as it relates to taxpayer certainty, which is very much welcome, because there must be a balance between collecting but also ensuring that taxpayers' rights or there's equitable distribution is also recognized, is the fact that there has been some clarification, or we'll see clarification around the order of certain deductions, particularly in the financial services sector, around set-off of assessed losses, donation deductions, so that taxpayers have certainty in that regard as it relates to their tax positions.
We've got 4 minutes left, but before I ask final thoughts, Frank, I don't want to miss the opportunity to talk about the informal sector.
Great.
And whether or not there is some opportunity to grow and broaden the tax base through the informal sector. Do we know how big it is, and what's your views on that?
Definitely. So it's obviously not ideal to have a large informal sector parallel to the formal sector. What the revenue authorities would want to do over time, as well as government in general, is to pull those businesses, let's call them, into the formal sector. But in order to do so, you obviously have to create an attractive environment. So we're back at what type of environment have we created? And this is one of the often cited things when it comes to budget time, is what is the government doing about ease of doing business, red tape? There may be a corporate tax rate applicable to informal businesses that are up and working, but that's a lot lower than the formal basic tax rate. There's not much thinking being done in that type of space. We know there are a number of large industries that are working in the informal sector, taxi industries, funeral services. They're a largely service-based economy that exists in the informal sector. And how does one formalize it? Well, you've got to provide some kind of incentive. For me to change my business to a formal business and pay whatever it is in taxes, what am I getting in return? Or do I migrate from the formal to the informal because of the, that would be very unideal in this situation. So I think we need a lot of thinking around, well, how do we bring that informal sector into the formal sector? Because, it comes with it as well a lot of benefits. Things like unemployment insurance, things like, medicals, etc. All these things that we take for granted in the formal sector are not available in the informal sector. And therefore, it's not an easy thing to solve, but I think there's probably 30% of the economy sitting in the informal sector by GDP standards. How do we integrate that into the formal sector? Well, we've got to make the formal sector more attractive.
Thanks, Frank. In the last minute or so, maybe 20 seconds final thoughts. Itumeleng, I can start with you, and then Carolyn and Frank.
I think, in my view, a difficult budget, but well balanced in the current circumstances. I'm sure corporates will be very happy that there wasn't an increase back to, the corporate tax rate. And there is certainly scope for more certainty around some of the provisions which govern corporates. And hopefully that is something we'll see in the draft legislation.
I think from my side, there's still a distinct absence of any mention regarding NHI. It is an area that we still need a lot of clarity around. And I know there is a lot of, political activity going on in the background. So, but not mentioning it at all, it's kind of the elephant in the room kind of thing. And the other thing that I felt there had been an indication towards was around threshold shifts, not just in relation to personal tax brackets, but where there are exempt thresholds that have existed for many years. We were expecting to see some changes in those to cater for inflation, which we didn't see, which is a little disappointing. But I guess under the pressure that they were under, it kind of, that would have added to the burden.
Given the economic environment, I think what was important here is I would have liked to see more money going to these corruption fighting agencies, MPA, SIU. We did see SARS, so that's a partial tick. We also saw Statistics South Africa getting a little more budget allocation. I think that's important. If you want to run a country, you need to know what's going on. You need to empower your statistical agency to find out what's going on so that you can target various inefficiencies or areas that you're neglecting. Other things that I liked about this budget was the announcement that there would be spending reviews. We know 240 spending reviews, the minister has mentioned, had taken place, the results of which are continuing this month and will be presented to Parliament next month. And I think that's sort of our version of this Doge that's happening in America. Do we just take the budget as it was given to us, or have we actually interrogated whether the expenditure items are necessary? I think that's a very necessary area to look at in our budget as well.
Thank you. Thank you to the panelists. Really appreciate it. It was a very exciting and interesting talk. I appreciate your time. Thank you to our audience for joining. Hopefully we'll get the budget approved. If not, we'll see you again. Enjoy your day. Thank you for watching. We'll send budget information and a recording of this to you. And to next time. Thank you.